There's a ghost in the machine, and it's haunting Bitcoin. It's still there. Every time Bitcoin looks like it wants to break free, there's a hesitation in the market. We got the big boys that are selling into a regression channel. That's my take on it anyway. We got a CME market gap that we got to keep an eye on. We know that if we lose 106,000 on the weekly, the floodgates are going to open and we could actually return back to the old CME market gap at 97,500. Institutions are already moving. They sold into strength at the top of the regression channel and they bought back lower at 112, as we said they would. It's not emotion, it's execution, and we're going to break it all down for you today, and we're going to show you how the pros are looking at this. So, welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you haven't already. And of course, come on over to X and follow us on X where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs on this channel. All right. Let's break it all down. What's going on? What are we seeing right now? All right. I'm telling you, the ghost in the machine is this damn potential double top. I'm so tired of this thing, man. I'm really tired of it, but it's there. It's hanging over our head as usual, giving us a little bit of trouble right now, but I'm not really too well, look, as a trader, I have to look at both sides of the coin, right? So I'm looking at what's going on with the regression channel. Bitcoin's been testing the break upward for let's say a week or so after we had that debacle of the ADL. Right now, we also have the Fed coming in, and they're potentially gonna cut rates. Right now, the tape keeps telling me the same story. The failed momentum at 116. Okay, it was basically a rejection. I put up a regression channel. I said, what are these guys doing? So I wanted to put up a regression channel. And I'll explain to you if you don't know what it is. It's a very simple tool. It's nothing we do is complicated. I mean, if you had to do this by hand back in the day, it'd be a pain in the neck. It'd be statistical analysis and, figuring out where the mean is and blah, blah, blah. It's very, very similar to an Andrews pitchfork in a way, but it uses statistical standard deviations, right? And you can set those. But as it stands right now, when I was looking at it, I said, you know what? These guys, they took advantage of the original, in my opinion. Okay, of course, this is my opinion, but I'm looking at the chart. And I'm saying, okay, they took advantage of this spike upwards. Remember, we talked about this spike. We said there was a lot of volume on there, and then it was short covering because once it fell back down, that was the clue that it was a totally short covering rally, and they got some of the bears out of the way at that time. Then we fell back down, we came back down to the bottom of the box. Okay, that's been past history. So really what a regression channel does, as I promised I'll tell you, is that if you look at the slope, basically what you could do is you could look at, a support line, right? So I just cut through, this area here because, these wicks aren't really too important. The body's more important to me. So I just said, okay, I'll take, now this point right here, the low is important, but as I adjusted the regression channel, I said, okay, this looks better. Just looks a little better because this looks like, a white cop type of spring to me. So, of course, I'm using a little bit of subjectivity on this, right? And basically, that's what you can do. But really what it's showing you is it's an upward slope. It's kind of a bullish trend. It's not a severely steep upward slope, which is good. It's a very nice, calm upward slope. Now, that means it's, kind of bullish right now. Of course, if it was a downward slope, it'd be bearish. If it was a flat regression channel, it'd be consolidation. This is all you use it for, okay? Now, the outer bands, which are like this blue, right, represents, a statistical overextension zone. Now, when a market is in a full, bullish movement or an upward moving trend, it's going to blow through it. And it's going to use the band itself as support, right? So that's another issue. But right now it's an overextension zone. So I think the big boys saw this and they said, you know what? The market's very, very shaky right now. The retail is nervous, right? Sell into it. Now, of course, if market forces overcame them, they would have been the first to start buying back, and they would have been buying back aggressively. Okay, they weren't going to get caught short, but what they really wanted to do was do exactly what they did. I said I think they want to drive the price down below the 112 to scoop, and they did. So right now, the lower band near the 112 is where the smart money quietly rebuild or started to rebuild their exposure. They started to buy back what they sold quietly. Okay. Now we got the Fed rate cut that's going to come, but I'm going to tell you right now, 25 basis points is already priced in, and we'll get into that in a second. But when price rides the upper band of this thing, okay, if it's riding this upper band, it's basically saying that the momentum is strong. But when price stalls, it's basically saying it's a trend exhaustion, and that's when the big boys will fade it. So if you notice right here, the price was actually riding the upper level, and then we had that one spike up. That's where they sold it. They took the chance, right? Trading's risk. They took the risk and they actually looked to buy it back down here. Now, they had a little bit of an issue here with the upward movement, but it eventually fell right back down to where they wanted to scoop it. So it acts as kind of like dynamic support and resistance. All right. So smart money distributes into the strength at the upper band and it reaccumulates when the crowd capitulates near the mean or lower. So that's what the mean would be right here. Or lower would be this lower band would be the support. So again, I go back to the ghost in the machine, this bloody potential double top. If we can hold, all right, I'm going to give you a new support point, all right, and I should have wrote it out, but 10,000, say 400. Let's go 10,400 is right now the line in the sand to hold. If we can hold between, say, 112 and 110, we got a potential push to take out the 116 top and go up to 118. It remains possible, no problem. All right. The reason why I'm saying it's kind of, I'm not saying with great conviction is because I know what's going to happen. The rate cut's going to come and it's going to be as expected. And a lot of people are going to puke positions because they're going to be expecting the rally to happen immediately. But it's not. I mean, if they do a 50 basis point cut, boom, baby. Yeah. But if they do 25, it's already priced in. You got to understand that. Everybody's expecting it. Now, if they don't do it, oh, man, the floodgates are going to open for sure. We're going to break the 106 and we're going to attempt to drop down to like 95,000. That's why I keep saying this damn thing is in our way right now. Okay, it is what it is. We're going to trade through it. That's why you got to get into a pro group. We'll help you trade through this. All right, it's going to be. I would suggest doing it like as soon as you see this video, jump in. It doesn't cost you anything because you're going to need some help through this. Especially if you're a lone wolf guy sitting in the basement with the hoodie on, you could get a little nervous. So get in there, start talking to other traders, and Frank's in there. There's a few others, guys in there that will help guide you through. Justin, I think, is still traveling, but I think he'll be back soon. What a vacation, he went somewhere over in like Asia somewhere and started like traveling Asia. I don't know. I wouldn't do that, man. For me, nah. I'd rather go to Hawaii and just like lay on a beach. But anyway, so what this thing is saying is we lose 106 on the weekly close and the top ghost materializes. This will be a fast unwind lower. But as we see it right now, as I see it right now, if we look at where's my Bitcoin? There it is, right there. Well, actually, you know what? Let me discuss this first. The Bitcoin market gap right here. It's a small gap, okay? So price flirted with 116, but it didn't close the gap. Backfilling to 112, I think would be good. I would not want to see it break 110, like 110.4, 110, 110,000 even. I wouldn't want to see that. But Most won't buy it, but smart money will take a shot at it. I mean, look, they were trying to get it down there anyway. They got some. Now, I'm not sure. I don't know if they closed their complete short, off of that regression channel. I don't know. I mean, I would think they probably got back at least 80% of their short. They leave 20% open, put the stop and entry, and see what happens. Because if the Fed comes and doesn't do anything, you're going to get a windfall off the short. If they come in and do 25 basis points cut like it's expected, it's already priced in. It's going to be volatility, a lot of volatility. So at this point, you got to be patient. You got to be surgical with the marketplace. Now, we can look at Bitcoin, and we know that Bitcoin is basically trading in what we consider the kill zone. We got support at 106 is holding. Resistance still remains stacked at 116. All right. Now, this is a game, a trap and breakout. This is where the institutionals, the whales, trap retail before detonating the next big move. Next $10,000 move, explosive upward or downward or downward. So until then, patience, being patient with it is being profit. Patience, no position is a position, right? If you don't know and you're not in the money, you don't got anything on, just like relax. The market's always going to be there for you. The market is here every day and it offers opportunity, oceans of opportunity every day. So there's every day, that's what I see a lot of people that are new to this or young traders, I would consider, even if you got a couple of years under the belt, you got to realize that the market is always there. It's not going anywhere. I see people, they don't want to I'm not taking any type of vacation. I'm staying in. I'll miss the move. Baloney, man. Go take your vacation. Don't even look at charts for, a week. Get the mind ought to be diverted to better the thinking, right? So it would be a good time. You need to take vacation. If you don't, you're gonna act out your vacations in the marketplace. You're gonna be looking for excitement in the market, which is a bad place to be. But the point I'm trying to make is this. The market's there every day. If you got a system, you follow it, it's going to give you trades. It doesn't matter. It doesn't matter where it is, So my interpretation right now, my trader's interpretation, it's not really breaking out yet. It's breathing inside the regression range. That's what I'm seeing right now. It's just breathing inside the regression range. Now, this is a high alert, high volatility moment. It's not time to get reckless. It's time to get into our pro group, all right? Because we see institutions are rotating positions. They distributed near the top right now of the 116. They reloaded at the mean and a little bit lower. It's where the pros they're really working, all right? And retail reacts, professionals anticipate the next rotation inside the structure. Now, we're all waiting on the Fed. We're all waiting on the Fed, okay? Now, here's the thing. As I said, if the rate comes as expected, it is already priced into the market. If they do something deeper, like 50, oh my goodness, then we're looking 118 a break and 120. We'll be playing between 118 and 123 if we get a 50 basis point cut. If we get 25, we got to be careful because it's already priced in. And every meeting this year triggered a Bitcoin dump. 10, 6, 8. Today's meeting, it's the same bloody setup. But the outcome doesn't have to be the same. So you got to position accordingly. We've seen what it does in the past. The past is prologue. Now, a 7, if we drop back down to like 103, we're opening up a potential, right, to go right back down to, look, here it is, the 97 and 98,000. All right, because there's people that will be the buying opportunity of this season, of this quarter, because we know Bitcoin's in its favorite quarter. Okay, in my opinion, all right, that get in a group. I'm not. We'll help you with trades. That is for sure. Okay. Now I want you to remember, if we look at M2, right? M2, there's plenty of fiat money sloshing around. So any dip, in my opinion, is a buying opportunity. Now, I want you to remember the old saying, okay? This is a very old saying from 1918, okay? 1918. A trader by the name of Dickinson Watts said this: the un the expected rarely happens. The unexpected constantly occurs. Oh, I'm sorry, that wasn't Dickinson Watts. It was actually Jesse Livermore. Jesse Livermore said it. I think back in like when he got crushed in cotton, he basically said that the expected rarely happens, the unexpected constantly occurs. That is a genius saying from a genius trader. So I think it's a wonderful thing. Write it down. The expected rarely happens. The unexpected constantly occurs. All right, so we all got eyes on gold, right? We got guys, we're looking at gold. Okay, right now, gold. Okay, we're seeing it coming off the highs, which is, okay, we're still flirting at 4,000. We really need a break of 3,600, 3,000. Let's say 3,700 is the main support right now. A break of that would actually say the potential top is, it may be in right now. So right now we're seeing like gold out, Bitcoin in. Okay, now look at this. I've never seen anything like this. I mean, I look at this and I go, oh my goodness, man. Like, look at this. Back in 2020, it was $9,000. 5 years ago, it was $9,000. What? We're at 116. I've never seen something do that before. I mean, if I'm just, I'm talking out loud now. I looked at this and I'm like, holy smokes. What? I've never seen any asset do that. My goodness. And it's still going up. I mean, moves like this don't mean something is bearish. I mean, it means this thing is bid. It's bid. Okay. I've got a story about NVIDIA, which was like in the talks, because they were giving a speech yesterday. But, I had a friend of mine who was trading NVIDIA. And he was long at like 325. And he basically was long at the top. And the thing sunk. I mean, it went down and down, So all of a sudden it breaks up and it's trading at 390. So he calls me up and he says, NVIDIA's up at 390. What do you... Now, I knew his position. We smoked cigars together. So I said to him, I know what you want me to tell you. You want me to tell you to sell. But I'm going to tell you right now, double up, buy more. This thing is going, man. I thought it was going to like 500, 600. I had no idea it was going to do what it did. He followed my advice. What did I get for it? Not even one cigar. I'm hoping you're listening to this. You at least owe me at least a box of cigars for that. Man, you cheap guy, man. Cheap guy. All right, so we got eyes on gold right now. 2020 gold peak, Bitcoin prepped for 600% rally. We got the same going on right now. Same divergence, same trigger. Smart money knows where this ends. Look, we showed you this chart just yesterday, okay? And we all know that wedges don't last forever. When Bitcoin breaks out of this wedge, it's going to be one that's like a super cycle. It's going to detonate. It's going to blow gold away. Because we explained this, central banks have already bought gold for their balance sheet already because of Basel III. We explained that, right? So there's only one thing for them to do is actually look at Bitcoin and go, yeah, we need that. We need Bitcoin to actually act also as a reserve asset. And when that happens, you're going to witness the birth of the Bitcoin super cycle. All right, let's go on over to good old Ethereum. This, right now, Ethereum, we're looking at it. And we could say that Ethereum is repeating the COVID fractal. Ethereum's 2025 mirrors the 2020 COVID fractal. Boring sideways moves, then explosion. Consolidation is really major accumulation. Smart money already knows, you're staring at the calm before the next generational move in Ethereum. We think Ethereum is going to jump at least to 10,000. Okay. Now, while Bitcoin fights the ghosts in the machine, Ethereum is quietly building the next chapter. We had the Fomc upgrade has passed its first testnet. Mainnet launch is locked for December 3rd. The upgrade improves throughput, staking efficiency, validator rewards, setting the stage for a renewed Ethereum supercycle. So we got Ethereum right now is coiling between 3,800 and 4,120, forming what we got a symmetrical triangle on the shorter term, but on the longer term, look what we got going here. Monthly bullish pennant breakout. Textbook bullish pennant breakout. So it's coiling for the next historic move. It isn't speculation. It's going to be precision. And smart money sees it. Retail will chase it. We've alerted you to it for already about a week and a half. All right, now get in our pro group. Price action is basically starting to scream for liftoff. Now, if you look at on-chain data, like you look, whales and institution treasuries have been accumulating steadily. ETF inflows have crossed 380 million. They have already outpaced expectations, and shifting ownership towards long-term hands is happening. So right now, my interpretation is Ethereum is set up for the buy the dip. Get ready to sell the main event up at like 6,400 to only rebuy it back. I'm thinking the first spike is going to be 6,400, 6,500, then a little dip, then buy that boy back. Okay? So that's what I'm seeing. So break now, if we get a break above 4,200 with volume, all right, and I don't mean spike of volume, I mean steady volume, potential momentum to run to 4,006, 4,007 is there. We break that, and we're up at 5,000, 5,002, and then we get that target like zeroing in at 6,300, 6,400, something like that. So the message for us, for you guys, is Ethereum's volatility is compressing while fundamentals definitely improve. It's a setup for patient and professional traders. So while Bitcoin is defending its structure, Ethereum's quietly arming for a breakout, and a big one. When the door opens for Ethereum, you'll want to be in the room already. Okay, you're not going to want to try to get in late. All right, let me do a quick promo where you understand how to get into this free group I keep talking about. Right here, you click this link, you'll be taken over to our Telegram trading community. We drop insane alpha trading opportunities every day, long-term setups, long-term gens. We got you covered here. All right. If you want to go it alone, well, we offer 2 brokers that are offering insane bonuses attached to new clients through our links. We got, I think WeX is offering no fees for life. I'm not sure, but they have that. They also have BTCC is offering a $500 token giveaway, help you out with your account. That's awesome, right? These are both low fees, fast execution. But really, I would suggest just come into our trading room. You want to level up your trading, come in, trade with us. It doesn't cost you anything, okay? So let's move on. All right, so let's get on to Bitcoin dominance. Bitcoin dominance, this bad boy right here. All right, setting broadening wedge. It broke it, but then it has a nice retrace, and it's still sitting at 59, like 80 right now, okay? So the breakdown always triggers rotation. We started with the movement down here, but then with that stupid Trump tariff thing, look at the spike up, complete wipeout. Right now, we're basically coming back up into it, threatening, actually touching this top, which is resistance, and we're hoping we're getting the bounce down from it. Now, we could stay in this area for quite a long time, but we're hoping, as this is a weekly, we're hoping within the next couple of weeks we start drifting lower, potentially taking out, let's say I would go down to this low pivot there. 57.90 would be nice, okay? So the alt season engine has been switched on. You just don't see the flames yet. It's taking some time. Altcoins really, they feel like we said this before, and I look back, I said, altcoins feel like December 2020. Sideways price, no hype, maximum doubt in the marketplace. Back then, 800% followed in a 5-month span. We're back in the same zone. And liftoff always starts quietly. There's not going to be any announcements. Nobody's calling you up on the cell phone saying, hey, you might want to get involved in some good utility coins right now. We're about to take off. Like nobody's doing that. So anyway, but we'll do it. Get in our pro group. We'll tell you. We'll tell you which coins are good as well. So alts took the heaviest damage during the recent shakeout. But beneath the noise, something is stirring up a little bit. Now, you look at Solana, Avalanche, Polkadot are holding key weekly support levels. ETF launches for alt assets in the U.S. just pulled in 65 million in first-day volume, a sign of an institutional curiosity beyond Bitcoin and Ethereum. Now, we got the macro backdrop that we got to keep our eye on, right? The Fed expected to ease. If they pause, we're in a world of hurt here if you're long. I'm going to tell you that right now. We could see rotation into higher beta plays. If they cut deeper, it'll be great. Also, the prime beneficiaries once Bitcoin stabilizes. Now, think of it this way. Alts are not lottery tickets. They're volatility instruments. Use position sizing, not hope if you're getting involved in them. Now, when Bitcoin and Ethereum confirm structure, that's when you deploy into alts, not before. Okay? So now, rotation levels. Solana above 190, trigger toward 215. ADA needs to clear 80 for a momentum resumption. Link building a base near 1350, potential spring structure there. All right, so before, how we're going to finish this video off, folks and ladies. Well, folks would actually incorporate both women and men, right? So anyway, what we're looking at is that CME market gap, okay? We got the Fed rate decision pending. I'm telling you, it's 25 basis points already priced in, so we can expect some volatility. All right, 17 billion in options expired across Bitcoin and Ethereum. So we need that too, right? So that's going to add to volatility. U.S.-China trade negotiation impacting risk sentiment. ETF inflows continuing to reshape ownership from retail to institutional hands. They're stealing your bags, man. They're stealing them. All right, so closing for today. We got the ghost of the machine that is still haunting us. Its data is, don't fear it, okay? Its data is misread by emotion. Learn to see through it in your trade like we do. Clarity, not chaos. We'll basically guide you through it in our pro group. And remember, always come on over to X. Follow us on X where we talk about Bitcoin, crypto all day, every day. And remember, what do you got to do? Well, you got to do your own research. As you know, I am a trader like you, and I do not offer any type of financial advice. All opinions are my own. Also, what else do you have to do? You got to trade with your head not over it. Don't over leverage yourself. And of course, as a short-term trader, you got to enjoy the party, but dance near the door. Cheers. I'll see you tomorrow.